and welcome to What's Up Ocala. I am your host, Andrea Praver, and I am going to be talking to my very good friend Macy this morning. You guys are going to be welcoming her back. Macy, tell everyone who you are, where you work, and how they can get in touch with you.
Hi, my name is Macy McConnell. I work for Brown & Brown Insurance Services, and the best way to get in contact with me is going to be 352-387-4252.
Awesome. Okay, so every time Macy comes in, she comes and shares some Florida insurance stuff that is just awesome. But you actually were mentioning even New Jersey today that you had policies going on.
Yes.
I did not realize this is all over kind of thing.
So, being at Brown & Brown and an independent broker, we are number one in the state of Florida, but we happen to also be number 4 globally now.
Wow.
So I have clients as far as Vegas and California, far north as New York and Connecticut. Like we were talking about New Jersey, love that area, but also here in happy, sunny Florida.
Wow. So you could actually work with somebody that maybe lives in a different state and has properties down here or maybe the second home or something like that.
Yeah.
Even. Wow, that's
We
awesome.
do that all the time.
So what kind of customers are you, because I mean, everybody's been on here and I know you've gotten some phone calls. Thank you all for supporting my people. I appreciate that. I love it. I love it when you support me, but I especially love it when you support those that come on the show and take the time out to explain and educate and sometimes entertain. And so you've gotten some phone calls. So what kind of customers do you personally work with? Because they really love working with you.
I love to hear that. So a lot of the customers that I'm working with directly are going to be more in the high net worth caliber. So that's going to be clients that have a lot of different policies as opposed to just having the one home and maybe one car policy. So the cars may be exceeding like 4 or 5, or you have the home that's, $1 million and above. And then a lot of times, and that's another thing I wanted to talk to you about today, is collection policies. A lot of people are not bringing this up with their clients, and I think that this is something that had they known beforehand, because I had a client a few weeks ago that reached out to me that wished they would have known about a collection policy prior.
Oh, it's one of those things you really, really kind of need to know before there's an
Yes.
incident, not after. That doesn't do you much good.
No, not until after the fact. It doesn't help you any.
Yeah. Well, I mean, I personally, with my jewelry and stuff, of course, I have the ring my husband gave to me, of course, but even that's pretty simple. I like, fun jewelry and stuff, but I don't really have any high end. I just have more stuff, from family or something like that. It doesn't have a lot of value. I have a little bit of a fear of wearing something on my hand that's worth more than my hand to somebody else.
Yes.
So I just kind of have that policy in my own little back of my mind or whatever. But what if it's something, I mean, seriously sentimental and something that has a lot of value to it and marketable value and maybe resale value, and somebody else says, I'm just going to go ahead and pop over to your house when you're not there and take that.
That's sadly, and it's not even about just the fear of someone coming in your home and taking it or misplacing it or losing, for example, with a collections policy for a set of earrings, which most women, we all like the big and sparkly ones.
I love them.
So when it comes to earrings, for example, if you lose them, let's say you just lose one. I had a client, went to the beach, lost one earring.
I lost one recently.
Mm-hmm.
It has no monetary value whatsoever. My daughter made them for me, and it's keys, which obviously, since I'm a real estate broker, and I cannot find it. So I'm trying to figure out how I can remake it before she finds out I lost one. Hopefully she's not watching this.
Doesn't know.
No. So what happens if you lose one earring?
So if you lose one earring, basically what happens within the policy is that you give them the one that you have still, and they will pay you the full amount of the both earrings for the set.
Oh, wow.
So that way, yes, you lost one earring, but at that point you're still getting compensated for the loss, because at that point it's a total loss.
Right.
You can't, unless you're Van Gogh, no.
No.
You got to have both earrings.
Both earrings. I don't know what it would look like if I tried wearing different earrings.
Yeah. So there's a lot of things, like me and you had talked about homeowners policy, and they have sublimits or, limitations within a normal homeowners policy. So it does not matter if you have the heart of the Titanic or a bubblegum ring. If you lose something in your home, it is going to be worth, ranging depending on the carrier, $250 to $500. So if you have someone who has their engagement ring Or, maybe it's a family heirloom. Like I have one for my grandma. She has like rubies and sapphires and things in it. Is it like really that expensive? No.
No.
But it's very expensive to me because my grandma had it made and I want it insured. So when it comes to those scenarios, it's about basically mitigating you having that loss and then having to eat the costs of losing something or something getting damaged or stolen. So another part of that, which I think people, kind of overlook, but especially with the homeowner market, because I think we're all feeling the premium increases across the board.
Oh, yes.
Everyone feels it, even with New Jersey clients to my Florida clients.
Really? Even New Jersey?
They don't have it as bad, but I'm like, it's still a conversation everywhere. It's because auto, that's where
Oh, right.
That's for next episode.
Okay.
But when you have all of your valuables, whether it's jewelry, furs, I have a lot of clients with rugs. They have their rugs insured. And then they'll have sports memorabilia, sports equipment. Then you have your silver, your china, stamps.
Wow.
It all kind of depends on what the collection is. Fine art pieces. So when you have that all scheduled into another policy, you're not relying on your homeowner sublimits or limitations to pay if it was damaged, if it was broken, if it was lost or stolen. So at that point, you are mitigating a claim on your homeowner's policy, because a lot of people, they'll just go ahead and make the claim. They don't get a payout, but maybe $500, maybe even $1,000 if you're with a good carrier. And then now you're stuck with a claim on your homeowners in this tumultuous homeowners market.
That would be
so
awful.
It mitigates hindering the integrity of your policy on that part, because it's completely separate altogether.
Yeah, I mean, even my rather basic ring. This is what I ask for, you guys. Don't fault my husband. I like having the little channel set, with the sapphires and the diamonds. It's still going to be more than $500, especially to replace it. Way more. I mean, to me, of course, it's not replaceable, but if a stone
were to fall out, all of those things happen. They happen all the time. We hear all the claims.
Yeah. So I mean, if something were to, $500, you can't get anything done for $500 with jewelry these days.
No, not now.
Yeah, no, that would not be very helpful.
And then that's where, like, I've always talked to people. I'm like, what is, always ask them about their hobbies, and that's for, umbrella insurance, excess, because everybody has, that one hobby that you're like, is it making, risky things happen? But with jewelry, I always say, like, what is your collectors? Like, what do you have a passion for? What do you feel like is always in your house and you're always on the hunt for? Because some people, it's pottery, or taxidermy.
Oh, goodness.
So we insure that too, because
do you really?
Yeah, I mean, like, if you have someone who's an avid hunter and he's paid a lot of money,
sure it's expensive.
I've had one client, he paid for that. He would go shoot a buffalo, had the the head done, and then had the whole body get put into a carpet.
Wow.
So that's a lot of money invested on the hunt itself, and then to go ahead and get everything fixed up. So,
oh wow.
I'm like, he wants to make sure if that gets damaged in any way, shape, or form, he's getting compensated for it.
Yeah, if he can duplicate the effort, time, and money.
Like, I wouldn't want to go sit out there and God knows where, have to wait on something.
I don't know that my hobby would really. We were talking a little bit about it before, but I really love auctions and stuff, and if I get items,
those impulse buys get everybody every time.
I love it. I love auctions. I love them. So, and I get what I need from it or whatever, and then I disperse the rest of charity from the items, which is fun. It's a lot of fun being able to do that. So, but I don't know that there would be anything of high value with that kind of stuff. I don't know. Hey, maybe one of these days, but
well, and that's another thing too. A lot of these policies, let's just say someone, regardless if you're really have an affinity for art, jewelry, any type of valuables, and you have a policy, and let's just say that you and your significant other, or just you're happy shopper by yourself, go to the auction on the weekend, and you just decide that I want another piece of whatever that you already have scheduled. There's a 90-day window of coverage to incur to add it. Wow. That way, if you're going ahead and buying something, I've had that happen, it's usually, as of lately, it's been my my auto people. They always want to add more to the car collection.
Oh, I'm sure.
Oh,
Probably
yeah.
even to the car itself if they're Jeep people. There's Jeep people are strong around Ocala. Trucks and Jeeps it's huge. They go mudding out in the forest and stuff all the
And
time.
like every
so.
time someone has like a pretty weather day, they're like, "Hey, I
Mhm.
went go buy an ATV this weekend.
Oh
I'm
no.
ready for the fun things."
What is that thing that everybody was driving around for a while it's not really a car, but it's not an ATV either.
Oh,
It's
the spiders. I
that
think it's the
yeah,
spiders. Oh no, the slingshots.
Slingshots.
That's what
That's
it
the
is.
one. Oh, those were super, super popular. Last year especially, I heard
Mm-hmm.
everybody was talking and trying to get
Well, it's
one.
like having a motorcycle, with not as many
Yeah.
dangers. It's got more wheels.
Well, that helped slightly.
Mm-hmm. It's got more wheels.
I don't know.
Everybody has their own thing.
So you insure all of this stuff, like basically everything, and then some hobbies, from items to collections to just everything. Taxidermy, I would have never thought of.
And I have a client currently right now. Her and her husband have, they love to travel.
Oh, okay.
And some people,
After my
they'll
own
pick up
heart.
the spoons. I have some,
Oh,
the
yes.
clients are people
Oh,
who
yes.
do, they'll get spoons or postcards or stamps.
Yeah.
Or little magnets.
Small things that fit in
Her and her husband collect bottles of wine to everywhere they go, a lot of different countries, a lot of different states. So her collection is a total, I think, at like $300,000 right now.
Oh, yeah, because every year it increases with
Yeah,
wine.
and she just and
Oh,
they'll go
dear.
somewheres and they'll go find that one bottle to commemorate them going on a trip.
Oh,
And I think that's
wow.
just so sweet.
It
You know what
is
I
very
mean?
sweet. That's something
So,
they can pass on to their kids and stuff. But yeah, that's a lot of value
oh
over
yeah, especially
time.
with
And
the way that the wine and the whiskey market, and then, it's something that, like you said, you can pass down and it gains with value.
wow, that's awesome.
There's not all items, are always going to be up and down with the market, but the value with it on top of that, food for thought. If you are getting these policies, if you are getting appraisals done within 2-year time period, that is a significant discount.
Really?
Significant discount if you're going to go ahead and get an appraisal, because it's really nice to say like, oh, this bracelet is worth $50,000. Insure it for $50,000. If you get an appraisal,
you will actually have
it makes
a
that
professional
premium
give an opinion.
because a lot of people, they'll just, for whatever specific, they're like, oh, I own, $200,000 worth of jewelry. I'm just going to do a blanket policy. It gets more expensive because blanket policies are just basically mysterious items as a whole. If you're going ahead and scheduling out each item and taking the time, and yes, it does take time to have a conversation with your broker, but they're going to be there for you all the way. I said, but a lot of times I tell, my clients, I'm like, do the time now, because if you're gonna, it's the one piece of jewelry that you don't have listed on your policy as scheduled, that's the one you're gonna miss.
Yeah, probably.
And then we're gonna have to make sure that we have a blanket over that to make sure that we're accounting for ones that you may have forgotten about.
Oh, that would just absolutely break my heart. If just
Yes.
the few pieces of jewelry that I have, they're more sentimental than anything. Something my grandmother gave me, or something that my father sent to me from my other grandmother after she passed away. Just that would absolutely just kill me if I could not replace that.
No.
If anything actually did happen to it. So yeah, that's rough. My husband, actually, I'm gonna have to give him kudos. He is going through a clean out phase right now after 10 years of not me nagging, but I was nagging. But anyway, he had a storage unit.
I was like, he must have been strong that day.
Woo! Well, this year we wanted to try to get even finer on our budget, and really, so since January we've really been hardcore at this, even before January. So stuff that's on our to-do list from the last few years, we're actually getting to it. We are really, really getting into it, which is great, and I think a lot of people are starting to do the same thing, which is great. So he had a storage unit, and he went in and cleared it out, and he's going through the stuff, but he is coming across baseball cards and stamps and all sorts, because this man does not throw things away. Okay,
they normally don't.
And he is a little bit older than me, so he would go to the Cubs games constantly when he was a kid back in the 60s and 70s, and primarily the 60s. So he had a whole slew of baseball cards that literally looked like they just got printed yesterday. And I'm looking at them like, oh, these are going to have so much value. No, they don't. No, they don't. But to him, there is a lot of value to them. And that's something that, he can pass down to our son and stuff. So, that's something very, very much that I would not want to just leave open. I would want at least that to be insured. I don't know that there's really a value to that right now. So what would you do with something like that?
So, and at that point, a lot of times, most brokers who are dealing with carriers that have these policies, there's a network of people that we're in contact with, whereas appraisers, everybody knows somebody who's in that type of spectrum or that realm. So we can go ahead and advise you, let's go have a conversation with X, Y, and Z. That way we can see what the appraisal is. Because at the same time you can't really replace something that's from the 60s with like, kind, and value because it's from the 60s.
No, he is definitely a very unique individual to have had this stuff.
Because that's what all those policies are really intended for, is if I lose something, I'm either getting the value for it, or if they're replacing it, because sometimes in the policies, they can go ahead and replace it. Mm-hmm. But it has to be like, kind, and value. So that means I can't just say that, like, I lost, a whatever type of bracelet with 16 diamonds and you give me a bracelet with 1 diamond on it. That's not like, kind, or value.
Right.
So it has to be equivalent. If they're going to replace it, it has to be equivalent.
Gotcha. So, but I mean, for him, baseball cards, for example, and there was a whole slew of them. That's why I'm using this as an example. Baseball cards, they sometimes are really, really high up in value, and sometimes they're worth absolutely not even the paper they're printed on. So how often, just as that example, how often should you go and get your items appraised?
It depends on the item, because jewelry, they like it, I guess, as long as you're reshopping your policies, probably 2 years within you wanting to remarket your policy.
Okay.
But items, at least go ahead and do it every about 5 years, 5 to 10 years, because at that point you're getting a good part of the market. Now, when it comes to cards, it's going to be, what card is it? Because baseball cards are hot. Yeah. Pokemon cards have been. Oh, no! Yes.
Are you joking? No.
They have not gone away, girl. They are here to stay.
Goodness.
A lot of people are insuring them because and when it comes to those types of cards and stamps and those things, it's all going to be about the edges, the condition, which card it is, what's circulation of the card. So, like, same thing as baseball and Pokemon cards. I always say those are 2 examples. That, they have the first generation, or you have somebody who has a specific player, that was it signed? Are the edges, kind of a little bit tarnished because, the kids used to play with them.
Right.
So it all depends on how safeguarded the card was. Then it gets evaluated that way.
Wow. Yeah, that's a lot. It is a lot. Because, these are little pieces of cardboard.
Oh yeah, these things were not meant to last. Like, this is not.
That's crazy.
They weren't made out of titanium and mortar.
Pretty sure when they were printing these up in like the early 60s or something, they were not going, I'm pretty sure we need to save this for 2024.
They thought it was going to get chewed up as the gum it came with.
Yeah, they thought it was going to get put on the spokes of a bicycle, probably.
Yeah.
And moved on.
That's what happened to a lot of them.
Yeah, it did. According to my husband, I was like, I hope you did not do that with any rookie cards. That's all I can say is.
I know, and there's a whole collection, but as long as, like, you're getting your appraisals done, I think working with your broker and having those conversations, and just kind of, if that's not a question that someone's asking you, then go ahead and bring up it in conversation. I have XYZ as a collection. I have a few items, and it doesn't matter if it's one significant item you want to talk about or, 10 to 20. As long as you're having that conversation and looking into, this is something I would like to safeguard. What would you advise me on that? And I think a lot of times that can pivot the conversation, because if someone doesn't know how to advise you, then maybe that's not,
Yeah.
Not all agents are made the same. But at the same time, that kind of gives you a pinpoint of, oh, I need advisement on this, and go find someone who's going to advise, where the appraisers are, what kind of policies would benefit, because there's certain carriers, I feel like, that play better with certain collectible items than others. So it just kind of depends, especially in the market the way it is now. It's this is not tumultuous. The homeowner market is tumultuous, but
It
a lot of
is.
times with my high net worth clients, they are able to do the bundles because they're working with a carrier that's Pure, or Chubb, Berkeley One, Vault. Those are blue chip carriers, and they're doing their auto, they're doing their all their collection policies, they're doing their umbrella or excess policies, and anything else that they need.
Hmm.
Because a lot of times people have multiple homes. I have one client, they have a house here in Florida. They have two houses here in Florida, and they have a house in New York, and they have a house in Vegas. It's all with one carrier, and it's
Wow.
all bundled together.
That's awesome.
So it just, when you get into that tier, when you have that type of client, it gets really condensed, but it's one complicated program. But you're just talking to one person and you're talking to one carrier, which I always tell clients the benefit of being with one carrier over having several policies is that it does not matter where the claim is coming from or why the claim is coming, because there's one person who's paying.
Right.
So at that point, you kind of mitigate having, some carriers have the he said, she said situation of like, oh, that's your responsibility. That's your responsibility. If you're with one carrier for everything and it's all grouped together, that carrier is paying that claim regardless.
Gotcha.
And then another thing with blue chip carriers, they have an amazing claims process that they will pay all of their claims 48 hours or less.
Wow. Wow, that's really unheard of. That's
Oh,
crazy.
it's different. It's a whole different ball game.
Wow.
But I think we had talked about, a lot of people, they want to just shuffle, information in. They want a quick quote. They just want to bind and they want to move on. They want to get
Yes.
the cheapest price. These policies are
In
not
15 minutes or less.
I
remember. Yeah.
I said 30,
Yeah, we'll say that. We'll say that.
But a lot of times with these policies, we have prior inspections. They go out to the home. We have a high value team that does the inspections because they know that a lot of clients, they have very specific materials used in their home. If the client got, marble imparted from Italy, that needs to be notated. It's not just,
absolutely. I just had that conversation with some of my agents on our last sales meeting because we've had people call into our office and say, hey, I need to know what my house is worth. And they want to know over the phone without us taking a look at the house. And it's
sight unseen.
Sight unseen, what's it worth? Here's
Do you have a crystal ball too?
Yes. And I'm just like, okay. Well, you can get that on Zillow pretty easily. I have a love-hate relationship with Zillow because it is very user-friendly and it's great to start the conversation. But as you actually have a need for detailed information, that's where it's lost. It's because again, it's an algorithm, it's a computer. So they're trying to use the ages here as computers. I'm like, you guys, stop doing that, because sometimes they'll just give it me like, here you go, here's what, based on the square footage, here's the amount. And I was like, you really can't do that. You have to go and see the house, because again, if they've put in like marble countertops, or if they even fence their yard, now that's eliminating the comps for all of the new construction maybe in the area, because new construction doesn't have fencing ever. So if there's a swimming pool, all of these things that have been added or done to it, does it have a new roof, all of these things matter when you look at the market price for a home. So you can't just, here it is. Nope. It's like
everybody thinks that like there's this magic system that has the perfect number.
Yeah. And then it's like, oh, well, you're just trying to get something. It's like, why would I get anything out of it?
No, there's nothing to get out.
Yeah,
because a lot of times, like,
it's kind of crazy.
And it's all how the home is evaluated. Like some people have like a formal living room, and then they'll have, a secondary living room that's a little bit more casual, for the family to actually sit in, the one that's pretty in the front.
Oh, yeah. Yeah.
And then, they have the special, furniture that you can also put on a collections policy.
Yeah.
But
it's different. You have to adjust.
Yes.
Yeah. And it requires actual in-depth, like, let's take a look at this, because, maybe they don't realize.
Well, like I have one client here in Ocala, they have a lot of special sconces that got imported. Oh. And I mean, beautiful as the day is long. But I mean, that's all evaluated into the cost of the home, because like kind in value, you're not going to go to Home Depot and find those sconces just on display.
Lighting is everything, honestly, because I know one house that is, it had a buyer for it, and the homeowner had done the pictures and everything, and then they had removed a chandelier. And the buyer said, I fell in love with the chandelier first and then fell in love with the house. I no longer want the house if it doesn't have that chandelier.
It happens. It happens.
It does. And it's like, to the seller, they didn't realize that was a big deal, but it really was. It really was.
There's
Do not make changes.
specific things in the house that, a lot of people are like, I love that for that reason.
Yeah. It absolutely is. So, and again, there's no way that you could find something like that just by an address. You have absolutely no idea. So it is very important to get all the information, get the details with that, especially if you're giving an opinion of value.
Oh yeah, because a lot of times with the market, and a lot of times, and it depends on the area. It depends on how tumultuous it gets, because it definitely depends on the area.
Yeah.
Here in Ocala, a lot of the homes, they're older. Yes. So it is a lot of how much renovation has been done. I have, when we talked about the fire departments, we have a $3 million house here that had major issues to go ahead and close on, just for the simple fact of it being in the area that it was in. Didn't matter how, this thing was immaculate of a house, but it was still problematic.
Yeah.
So a lot of times people think it's all very quick and easy, and I'm like,
it's not. We're not trying to make our jobs more difficult. I promise we do not want to do that.
I'm not trying to siphon all your information. I just need to know the details so I can help you. Help me help you.
Of that, when somebody calls you up and they're like, okay, here's my and I know they do this to you, because I know the customers I've sent to you. Love you guys. But I know that they call up and they're like, okay, here's my address. How much is the insurance going to be? That is an impossible question to answer. It's absolutely impossible.
I'm like, what they really want me to say, I'm like, I promise it's going to be under $1,000, and I'm going to ship it in a unicorn just for you.
But you not only have to find out the value of the house and how much to insure it, but you also have to figure out how close it is to like a fire hydrant or a fire station. You have to figure out if it's concrete block or if it's frame, because we did mention that before, how old it is.
Oh yeah.
And you also have to figure out if the roof was done. And then that's not even getting into what they want in the policy, which could, that's an endless amount of questions.
Because a lot of people, this has been a good for the homeowners, food for thought.
Okay.
So RCEs, this is a hot topic. So replacement cost estimators are what all of the carriers are using in the algorithms to go ahead and see what's your square footage, what's your materials for the house, X, Y, and Z factors to go ahead and say your house is worth X amount per square foot.
In order to replace it.
And that doesn't matter if you're in a high value home or you're in everybody else's. So with that being said, a lot of people in their mind, I've been paying my mortgage for 10 odd something years. I feel like I don't need to have it for the full amount because my loan isn't that much. They think that they can cut the cost of the premium because they wanted to kind of cut the cost of the dwelling amount. I'm going to tell you that's the quickest way to get canceled. They will non-renew you, or they will cancel you mid-policy, because that's a lot of issues for them, because in their mind, they know the carrier themselves are on the hook for the value of that home. So if you've somehow gotten it through their system, through whatever fabrication, that's technically lying on the application, because you're saying the home is worth X amount, and not due to the market, inflation, or any of those things, magically became another number. If you were to have a loss, it's just not a game that anybody wants to play. I can tell you that right now.
Yeah. And there is, as you said, volatility in...
It's so tumultuous. Everybody's getting non-renewed for the littlest of things. Don't make that be the one thing.
All right. So I have a little pet peeve. I obviously am not the biggest YouTuber on the planet because I'm not a YouTuber. I'm a real estate broker.
And a really, really good one.
Oh, thank you.
Fabulous.
Thank you. But I have, I don't know, several thousand subscribers, which is great. And I love you guys. It's awesome. But I have some friends that are also real estate agents, and they go on YouTube and so forth. And they put on, oh no, it's the end of the world kind of, things on their videos, on their thumbnails in order
very clickbaity.
Yes, very clickbaity. And it's also kind of, if you only read the thumbnails or only see the thumbnails, it casts a very different light. And I've seen quite a few saying, oh, you're not going to be able to get home insurance in Florida in 2025, or Citizens is no longer insuring Floridians, and stuff like this. And I'm just going, oh, and I even admit I have clicked on them going, wait, did I miss something? Because I don't know what in the world is going on with that, and then it goes into, more details and stuff. But, I think a lot of people are just reading those kind of thumbnails and not realizing that they're just trying to get you to click on the stuff, and they're coming in with these false assumptions.
Oh, yeah.
Which I absolutely refuse to do those things. So it is what it is. It might be a little more boring, but it's what it is.
Sometimes there's a bigger conversation than, the little quick read on Facebook.
Yes. So please tell me, am I missing something? I know that one of the homeowners home insurance companies did actually leave Florida, but they're leaving Florida, but they actually had already put this into place like last year or something. I forget what.
So a lot of times and it depends on the carrier. So if we're talking about a national scale, national. So if I am carrier A, and I am insuring homes in the state of Iowa, Minnesota, Florida, and Louisiana.
Okay.
There's 2 states that are cat rated and 2 other states that are not.
Right.
So my risk pool for me and all of my insureds, in my mind, are very even, because I have half of my clients in 2 states that are not really that risky, and they pay their premiums, and most of them are probably not going to have that many claims other than, the natural ones. And please, for the love of Christ, go ahead and get you that automatic water shutoff valves, because we talked about having water damage be the number one reason people are having claim increases. It's not even hurricanes.
No.
It's water damage and those storms that have been passing through, but it's always water damage. But if I have a carrier, me as carrier B, let's say I'm insuring California, Florida, Texas, and New York.
Oh, you're basically just really love risk. You probably have some adrenaline issues going on. Yeah.
It's like on the weekends I go skydiving every weekend. Yeah. I want to fly from the moon. But with that carrier, their risk pool has a lot more risk in it. You're having tornadoes, you're having fire, you're having hurricanes. You have a lot more in your risk pool. So a different carrier's appetite across the board. So let's just say carrier B, for the lack of better phrasing, bit off a little bit more than they can chew because they cannot afford their reinsurance anymore. I now have to pull out of one of these states to be able to afford to keep insuring my 3 other states.
Gotcha.
So I'm going to go ahead and pull out of Florida because I think I can handle California, New York, and Texas.
Well, the interesting thing with the rest of the nation, since we're talking on a nationwide scale, I have heard that Florida only has maybe, it is a pretty high percentage. It's about, I think what they said, like 20%, 30% of the actual claims for hurricanes and stuff like that. But we are more like 70 or 80% of the lawsuits to the insurance companies.
This is why your auto is so high.
Yeah. So we have a tendency to sue the insurance companies.
We are the number 1 litigious state in America here in Florida, which that's not the trophy that we want, but it's the trophy that we got.
No, if y'all could help me and not sue anybody anymore, so we have more options available to us, that would be really amazingly excellent. I would appreciate it if you could just help me out with that.
That's where, a lot of these, when it comes to those types of claims, it gets very convoluted now. That's why the auto rate is so high. That's why getting people excess or umbrella policies comes to be tumultuous. And it's why you need one here in Florida, because that, like we spoke about last time, umbrella access, Kate's a little fence between you, your assets, and the other party at the other side of that desk. So
helps.
It really does.
Okay. What about trust? Because that is a really big thing right now. I'm seeing it more and more and more. People are putting their asset into trust in order to make sure that their kids don't have you don't have to pay death taxes and or whatever other reasons, to protect their assets just a little bit further, so it actually goes to those that they want it to go to, and kind of protect it while they're alive as well. How would that be different for the insurance?
It's not different at all. I have lots of clients who do that.
Wow.
So again,
wonderful.
I deal more in that high net worth specter. So we have clients where everything is in the LLC or the trust. So technically, the LLC or the trust is the number one named insured, and everybody else is secondary. So at that point, everybody's still listed on the policy, but they are listed as first.
I see.
So that makes it no different. Now, there's certain carriers that they have specific questionnaires that they want filled out because they want to know who actually owns it. Like I do that with some of my clients in their car collections. They put everything in an LLC.
Okay.
And that way all of the cars are under that. And then now this carrier particularly is Haggerty. Now they are fine and dandy with dealing with trusts and LLCs as long as one individual or the spouses own that entity.
Okay.
That is fine and dandy. But if they have multiple people, it's a no-go. So it just depends on the carrier. There's some carriers that are fine with that. As long as it's in the entity and they have all the entity members listed, it's fine. So it just kind of depends on what your situation, as opposed to which carrier is going to be more beneficial. And that's why I always say to go ahead and have that conversation with your broker. Everybody thinks that they have a very, very special situation and nobody else has done what they've done. I'm pretty sure that someone's insured somewhere that's doing exactly what you're doing.
You've pretty much seen everything.
Have the conversation and say, this is what the situation is. Because the way I look at it, it's like going to the doctor. I don't want to tell you my symptoms, but I want you to fix me and tell me what's wrong.
That doesn't work that way.
No. So I can only help you if you help me with the information that I need. So if you tell me what the situation is, what your goals are. Me and you had talked about it last time. Look about what's your 5-year goals, 10 years goals. Are we looking, with your homes and your cars and your collections? Are we looking for resale value later on? Are we looking, to maybe move and have this as a rental? All of those things are conversations that you can have with your broker, and at that point, you're situating them with a carrier that's going to give them longevity. I know a lot of people want to jump around for $20 savings here and there, but sometimes I've literally had someone who came to me and they wanted a second opinion, and they went to another carrier and they got a cheaper premium, but they didn't realize that their house got cut by like $200,000.
Ouch.
So they were so focused on the money part that they did not realize that they had no other structure coverage. Their dwelling got cut by $200,000, and they had no loss of use, which if not everybody can afford to have multiple homes. And if you have one primary, if something were to happen where your home was uninhabitable, you're not going to have a part of the policy for you to be able to afford to go and rent that hotel room and cover your food costs. So
that's
a lot
scary.
of times people, it's kind of like me and you had talked about, someone bragging about spending $80 a month on car insurance. That tells me how little coverage you have. Please don't get in my car and think you're going to drive it. That's
Yeah. That is definitely something that is what we've been looking at. And so, of course, my daughter turned 16 last week. So
I love that for you.
Oh yes, it's so fun. It's not too painful yet because she's still on a permit for at least 1 more month. And I'm already going, oh, this is going to be great. But and then having the policies where we're insured for business. So many times when I sit down with agents, And I have a list of questions that I ask them just to see how far along they are in their business planning process. They don't
Yeah.
realize that they are a business. Some of them are coming in as employees before, and now they're owning a business. And there's, I need to see if it's clicked yet.
Oh, yeah.
Because some just think that they can sit at home and watch soap operas and eat chips, and money just rolls in. And when you're self-employed, somehow that happens.
Was not on my career day. I wish that was a thing.
That is not how my day works, let me tell you. So, I need to know if that's a thought process for them, and to see how much business planning they've done. And that's one of the questions is, do you have, what kind of insurance do you have on your car? Not because I really necessarily care too much about that, but it's more, how serious are you at this juncture? Are you in the planning stage? Have you made preparation for this career shift that you've done? And even experienced realtors sometimes do not have a business plan in their car. It's just regular car insurance, and they put clients in their car. And I'm like, that seems like a bad plan.
A lot of people think that it's not going to happen to me. I hear that. Oh, I thought that was not going to ever be an issue. This is the
only people that get in car accidents are those other people.
It's always the other people. But for an instance, even if, again, a lot of people think that, oh, I don't have to tell them, they'll never find out. This is one of those stories that you hear it and, it's a warning to other people. So they had this lady whose son turned 16, 17 years old, decided that she did not want to pay for the premium for her to be on the same policy as him. So she got him with another carrier, and she was with the same carrier she had been having. So she said, and here in the state of Florida, you have to list all living drivers in the house. So like that, have a license and can drive.
Oh, yeah.
Doesn't matter if it's on your policy or not.
Yeah.
That's how Florida works. So she had him as an excluded driver on her policy. And she had this policy for a year and a half with him excluded. Oh, my son will never drive my car. It'll never happen. He'll never need to drive my car. He has his own car. It'll never happen. He did drive it to the grocery store and did proceed to get into a wreck where he was at fault.
At 17 and a half.
At 17 and a half.
Oh, no.
Old. And so what happened was the insurance company gave her all of the premium she paid from the inception of the policy, from when she put him as an excluded driver, and canceled her retroactive that day she added him to the exclusion.
Wow.
So because she lied,
it was a fraudulent policy.
Yep, it's as soon as you have any lies or anything that's a lie, omission, fraudulent,
a few $1,000s,
they will retro-date it from the day that you lied, and they'll give you back every ounce of your premium, every penny. They'll give it back to you because they know that that's cheaper than having to go through that lawsuit.
Oh, yeah, the attorneys alone.
Oh, yeah.
The attorneys alone are going to be, and she's responsible because he's not 18. He's not 18, and it was her vehicle. Oh, bless her heart.
And
I hope
then
she's okay.
Getting coverage after that is going to be an absolute nightmare.
Well, not only that, but what about the other driver that was involved in the accident? Now that you've got this 17-and-a-half-year-old kid that's technically uninsured.
Oh, yeah.
Not good. Not good. Yeah, don't try to see.
Everybody thinks that they're going to get the one that's going to get around it. And
the bigger, better deal. The bigger, better deal.
Yeah.
I got to get the bigger, better deal. I am smart. I'm smart. I am going to find my way around this. Yeah, no, my husband and I, we went through it with our son first, and my husband is the detail guy. So he will find every detail under the sun, and then I try and find the loopholes. That's how we work. There was no loophole. There was no loophole that was a good loophole that we just, okay, that's what you need. That's what we're going to pay. And that's what we did. We don't want the risk. I want to be able to sleep at night.
No, because a lot of times again, Florida's the number one litigious state in America. That is where you're going to get sued. What do you do most times? People are up and down the coast all day long. You're going to different beaches on the weekend. You're going shopping on, everybody's moving around. And then even if you are staying in your town, everybody else is moving around. You're liable to get hit by someone, and then who's too happy over who?
Yeah.
That depends on the day.
Does not matter that you are the world's most amazing driver. At 17 and a half, you are still driving, and sometimes it's not up to you. Sometimes just stuff happens. It's called an accident for a reason, right?
Yes. Not all of it is, malicious or, just
No,
someone,
yeah,
having mischief on the road, but sometimes it's just
yeah, and sometimes,
situations
yeah, I
get taken out of context and it runs from there.
yeah, I've definitely gotten where, I'll be 2 miles ahead and I'm like, I do not remember the last 2 miles. I do not remember driving.
Did I
I
pass a green
obviously did.
light or
I
did I just keep
know.
going?
I know. It is. If you really think about it, while you're driving and stuff, it's like, you just kind of,
Hmm.
there's the scenery. And then you're like, wait a minute, did I do everything? And that's really when accidents happen, is when
It
you're
really is.
not paying that close attention because,
Oh, yeah.
yeah, you're just kind of in autopilot or
Well, and
something.
a lot of
So
people
not good.
nowadays on the road, they're texting and driving, they're,
No, that doesn't
oh,
happen.
doing
No.
Candy Crush and driving, what
Is that
have
still
you.
a thing? I
I
don't know
feel
if they
like
play.
I
I
feel
don't
like
know.
I've seen
I
a
think it's
commercial for
Monopoly
that.
Go now. It's
Monopoly Go,
Monopoly
that's the
Go.
new.
Yeah, that's the new
I'm
thing.
behind.
So yeah, it's a thing now. All
Mm-mm.
right. Well, speaking of behind, am I behind then on any of the insurance issues? We still have homeowners insurance here in Florida.
Yes. So
Okay.
talking about that, because you had said that you were worried about people not getting insurance here in Florida. That is never going to be a problem. So, with
We
talking
have
about
citizens.
carrier
We
A,
have,
B, and
yeah,
C, there's always going to be a carrier here.
right.
Citizens, again, and I think we've talked about this prior, is the last resort. That is not the carrier you want to be. That is because no one else is willing to take you.
Huh, fun. Well,
So
that's how it was always designed.
that it's not
That's,
supposed to
yeah,
be,
the main thing, the first
no,
thing.
that's
No.
not where you want to live
Yeah.
in the
And there's
in
some
the
good ones. We
citizens.
do have some really good ones in Florida that are just awesome. I've seen, what is it? Is it Sling? I've seen Sling a lot
Sling or
lately.
slide?
Slide. I don't know. Is it Slide?
Yeah.
Slide. Okay, sorry. I don't know. It's not mine,
There's
so whatever. But yeah,
they are
Slide.
a new carrier.
Yeah.
I also write with them, but
Oh, okay.
there's some that are a little bit more newer,
Hmm.
which as far as the market's concerned, we're watching because at
Okay.
Brown and Brown we have a whole department that basically watches all of the carriers.
Right.
So we watch their financials, we watch their AM
Wow.
and best rating, their Demotech rating, because we only write with A carriers.
Right.
Us as a
And if you're an
corporation.
unproven carrier, then you don't really
If
have
your
a
rating
rating yet.
drops to a B for reasons, we monitor that before. We're not going to just cancel all our clients' policies if you're doing right and
Right.
it's something else in the market. We are monitoring it, but we only really write with A carriers.
Gotcha.
So if there's someone we don't write with, there might be a reason.
Okay. So Slide is an A carrier right now.
Right now, it is
Okay,
is
cool.
an A carrier, but it's
Okay.
still a
I've seen
new.
some good
It is a
prices.
new carrier, so it's still they haven't endured a hurricane season.
Oh,
So that's it. They're just new. Doesn't necessarily mean it's bad. Doesn't necessarily
they're
mean
just
it's
new.
good. They're just new and they have
Yeah.
not been in a hurricane season yet here in the state of Florida.
Well, that's the interesting thing is with some of those larger, we'll say more established companies that decided, you know what, we're not going to go in Florida anymore, and they've taken off to greener pastures or whatever other states. That's kind of opened the door to these smaller, newer companies actually being able to get a foot in the door and really get a good standing. What's interesting, like for example, State Farm. At one point, State Farm was not writing homeowners policies anymore for the state of Florida, and then they were several years later again writing. So, what happens when some of these larger companies are like, you know what, we've changed our mind. We're going to go ahead and laws have changed in Florida. We're going to come on back. Well, a lot of people are going to be already written with these newer companies that won't be new companies at that point. They're going to be familiar with them. They're going to be comfortable with them. So it's really kind of opening the door.
This is the part where if you don't have someone who's really advising you, it's real easy to get into that mindset to say, I'm just going to shop and whoever gives me the best price and I'm just going to jet.
Because they're not necessarily the best company.
If you know that there's a company that comes in and out of your state, you're constantly going to be in a state of something that's tumultuous. Because like there's some people who have really strong financials and they're not leaving the state of Florida. Just as an example, I write a lot with this company. I love them. Have you ever heard of Tower Hill?
Yes.
Love Tower Hill.
Yeah. They've got a lot of owners with policies there.
Exactly. They have strong financials in the state of Florida. They do not plan on leaving, but they also are very picky on the clients that they're having. So they'll go ahead and say, they'll have quarter limits to say, in this zip code, we're only writing so many. We're only writing so many qualifications.
Very conservative.
Yes, they have strict guidelines. So if you get a policy with Tower Hill, that means you met the criteria. So at that point, they're not insuring everybody in a zip code. That means that they're making sure the clients that they do have on board with them are always taken care of.
Right.
So that way they're not over insuring a group of people. That way, if claims ever do come through, that they don't have enough, and then they have to deal with the reinsurance, and then rates go up and all this, that, and the third, because it's, you know, always robbing Peter to pay Paul.
I was surprised when farmers left Florida. I think everybody was surprised. I think even the governor was surprised. He was like, what just happened? Like, what? I think we were all pretty shocked that they decided to stop writing homeowners insurance policies for Florida.
So, and this is where, like, I always like to tell people, and it's, you know, price, service, and coverage. Pick two.
It's a good policy right there.
Yeah, pick two.
That's great.
Because if you are someone who's, I want my home insured and I want to have good claims coverage, and when I call that whatever number, I want to know that I'm talking to someone who cares that I'm more than just, you know, policy 1, 2, 3, 4, 5.
Gotcha.
So, but if you are solely worried about price, then you will be calling that carrier, and they will only look at you as policy 1, 2, 3, 4, 5.
Gotcha.
And either is it the service or the coverage that's not there. This is what I've just seen and heard from being in the Florida market. So, like Tower Hill, for example, I love promoting. You know, they have, they do all of their claims after a hurricane storm. You can do it via text message. They will notify you if you're in the cone. During the storm, they'll give you updates. And there's a lot of carriers who are doing all of these. I call them the bells and whistles of the policy. It's not included in your premium, but that's just something that carrier does in particularly.
Wow.
You know, Chubb does a lot of things. Pura does a lot of things. They are all very active, but those are the carriers that are very customer forward. They are always thinking of the customer. All of their guidelines are for that. All of their customer service. They're very customer forward. Then you have other companies, and it's not that they're a bad company. It's just that's not their main focus as a company, is to be customer forward. Right. They are good with you emailing them or doing the 1-800 number.
Yep.
So if you're not someone who's really all into service, then you don't need to be with a carrier, you know, that's going to give you all the bells and whistles, because this may not be something you utilize. Right. I feel like as an advisor, my whole deal is start with coverages. If you start with coverages and you know that the coverages are right, then you can pick and choose what you need after that and let everything else be a la carte. But start with your coverages being correct.
Awesome.
And I think after that, it's very simplistic after that.
Awesome. All right. So that is it for us for today, I believe. Thank you so much, Macy, for coming in and going over insurance with us. If you guys have questions for Macy and you want her to discuss it on a show and go into details on it, maybe if you're from another state or something like that, of course you can reach out to her, or you can go ahead and put it in the comments section of this video or on our Facebook page, and we will go ahead and make sure that our next video with Macy covers those questions for you.
We'll do a Q&A.
We will do a Q&A. I would have fun with that. I think that's a great idea. So
I would love to hear from you guys and see what questions that you have.
Yes, absolutely. So, all right. Well, thank you so much for coming in.
Always.
And one more time, how do people get in touch with you?
If you would like to speak with Macy, you use the phone number 352-387-4252.
Awesome. Thanks so much again.
Thanks, guys.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.